Good morning, everyone. Welcome to Admiral Markets. We're going to take a look at our live trading room right now. But before we do that, of course, first the disclaimer: explaining that trading for exchange in global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So we thank you for your attention on that. Yesterday we had a FOMC statement. We're going to take a look at the impact and what it all meant for our currencies in just a second. Tonight we have also, by the way, at 5 p.m. London time, an educational webinar together with the Toronto. We're going to take a look at Ichimoku indicator. So make sure to join then, if you have time, of course. And let's see. Other than that, we're going to focus today, in fact, on supply and demand trading. So it's a bit different focus, maybe. But usually we take a look at the trend, opportunity, filters, and trigger, and entry methodology. And we'll be doing that as well, but especially with specific focus on supply and demand. Make sure to take a look at the social media. And before we take a look at the Forex calendar and the Forex charts and do our analysis, I'm going to welcome Michal. Good morning.
Good morning. Good morning, Chris. Good morning, everybody. Thank you very much for tuning to our live trading session. My name, as always, is Michal Onhoff. Here's my lovely mug here. And I'm a client relationship manager at Admiral Markets, which means my job, in essence, is to create the best possible trading environment for you. You can always reach me on my email, my Skype, my LinkedIn, or since I'm an administrator of a trading camp, you can always reach me on the email camp@admiralmarkets.com. Since we have a live trading session today with Chris, once again, I'm going to do my fun with Forex bit and tell you about something interesting. I'm going to tell you about the tulip mania. So, just yesterday, I read a great story on the internet about a student in Norway who purchased $27 worth of Bitcoin in 2009 and simply forgot about them. When he eventually remembered about his investment, it appreciated in price quite a lot, and today his initial investment of $27 is worth a staggering $680,000. Wow! He actually bought a flat with his $27 worth of a Bitcoin stash. So in 2009 it costed $27. Now it costs $680,000. When I read it, I was a bit jealous. Well, who am I kidding? I was so jealous, I lost my appetite for an entire day. All I kept thinking was, man, I had $27 in 2009. I even had more than that. If only I did this small investment back then. So, to look at everything in a perspective, here's a chart of how Bitcoins appreciated over time. We can see they're peaking right now. So, to make my mood a little better, I decided to talk about something that used to be a lot and perhaps seemed like a smart investment and now is worth almost nothing. Perhaps sometime in the future I can speak to you about Enron, Lehman Brothers, or something else, but today I want to tell you a story that is just a bit older. In 1637, tulips in Netherlands were what Bitcoins today wish to be. Tulips were one of the highest priced commodities. The entire time period around 1637 was called tulip mania. At one point during the tulip mania, 12 acres of land were offered in exchange for one tulip bulb. In 1637, some single tulip bulbs sold for more than 10 times the annual income of the skilled craftsman. Here we go. Here's a chart of how the tulips used to cost. You can see they're peaking and then there is a sharp drop. Let's put it into perspective. A skilled craftsman nowadays can expect to earn around, well, we all live in different countries, but let's say a skilled craftsman can earn about 30,000 per annum. That's, I think, a fair amount, which means one bulb went for a monstrous 1/3 of a million just for a single flower bulb. So, how much are tulips worth now? Well, this graph is a very good indicator. because I'm pretty sure I can buy a few bulbs for the price of a Subway sandwich nowadays. Will we see the same happening with Bitcoin? I don't know. No one knows. What I know for sure, that some things never change, and gold, silver, and oil will always be a great way to invest your cash. How can you invest your money into those commodities? Well, it's simple. All you have to do is open an Admiral Standard CFD. An Admiral Standard has a CFD section that will allow you to invest into gold, silver, oil, indexes such as DAX and FTSE 100, and also all kinds of equities and stock. So instead of investing into something risky, which might cost nothing in the near future, invest into something that has been around for thousands and thousands of years. And if you wish to learn how to invest your money, you can always sign up for camp at Admiral Markets. This is a trading camp, which is a 3-week course with everyday assignments. You will be taught strategies, indicators. You will learn how to read the business news, how to look at the calendar, how to use technical and fundamental analysis. You'll receive strategies by professional traders, performance tracking, personal coaching, and literature is also going to be supplied. All you have to do to sign up for a course is write a short essay on your Forex aims, about 100-200 words, and open a real account with a minimum deposit. In some countries, it can be as low as $10. In some countries, it can be around $200. But minimum deposit, nonetheless, will buy you a ticket to the trading camp. Just send an email at camp@admiralmarkets.com or approach me directly at admiral@admiralmarkets.com, and me and you can have a nice, friendly chat about the trading camp. Thank you for your attention. I will now pass the microphone or the floor back to Chris. Thank you very much.
Thank you so much, Michal. Very interesting about the Bitcoin and Tulpmania. I knew about the Tulpmania, also considering the fact that I'm a Dutchman. Of course, I should, I guess, but that was pretty impressive growth about those tulps. Funny enough, didn't know about the Bitcoin, in fact, that it increased that much. And the first thing that popped in my mind is that if it's $27 that made almost more than $500,000, 600,000, what if he had 100 on it? Well, anyhow, still 600,000, not bad. Let's take a look at the Forex calendar. Yeah, the sound should be better. It was just the microphone settings that I logged in after. I plugged in the headset after I logged in, so then it uses the default microphone of the PC. So it should be better indeed now. We had a Bank of Japan press conference, in fact, today. And obviously yesterday we had FOMC. What I've read from the newspapers and from the experts is that the tone of the Fed statement was less dovish than expected. So there were some comments removed that were linking to or hinting at negative economic rebound that were taken away. So I don't know. In any case, there was dollar strength was the result of it a bit, right? And the movement was not as much as we really would normally see with the FOMC. It was a bit subdued. I mean, we got 60 pips movement on the dollar, euro dollar, dollar yen, but that was not really big fireworks. That in itself is what I expected. I expected some volatility, but not a lot, right? Because of this this announcement itself, maybe not the biggest of the biggest announcements. We got CAD GDP and USD jobless claims and some Euro news, as always. Nothing substantial, I guess. Let's go to our charts, and let's first take a look at the dollar yen, in fact. And well, we could start with let's start with the 4-hour chart. The green line indicates my take profit. The blue line was the entry. Oh, that was the trade I was looking at yesterday, right? A break above 98.30, a break above the top for that, and with the risk at 98.07. It had to be adjusted a bit if you did take the trade. I didn't, because it didn't break prior to FOMC, and FOMC was the one driving this break. So I didn't take this trade, but if you did, then I would get out now probably, or leave the stop at least there, because it didn't go as far as I expected. It just stalled at 98.67, unfortunately, and didn't reach our target. So in any case, I'm still in a breakout trade from earlier here. If you're in that with me, I moved the stop loss to underneath this 4-hour bottom here. That's the new support. No reason, I think, to put it anywhere else than there. I think that's pretty logical. If you have questions, let me know, but this is now obviously a 4-hour support level. Any movement down here could still be a retracement for continuation. If it doesn't bounce above 98, then I don't want to be in it, because then it could turn out to be, for example, a bigger correction, and we could be correcting this entire move up. Because what we have had so far, by the way, is a 5 move up, so we could see maybe a correction like this to the downside. It's possible. So it doesn't make sense to keep that risk on the table right here with a stop loss here if we're exposed to a bigger retracement like that. Might as well move the stop loss to a logical support level. Not only a logical support level, but because we're anyhow talking about supply demand, we can see as well that this zone in here is a supply and demand in a way, right? Because we had an impulse, sideways move, and continuation. So that would be a typical example. So we can zoom in maybe to lower time frames to see what level makes sense. And I will mark that with the box. 1 second. Like that. That is the entire supply and demand zone, right? We had 2, 4, 5 candles there, but it could bounce anywhere in that zone. The question is where and how far could we bounce, because we could bounce here, for example, let's see some upside and then still get this, right? That's possible. So let's take a look at the 1-hour chart. If we put a fib on the first down move here, we can see that we already hit one of the targets, the minus 618 target, in fact. So that could be the bouncing area. Or maybe lower all the way at 98. So I think anywhere around 98.10 with a stop loss maybe just below 98 could make a lot of sense. Very tight stop loss, but it's high probability that if it does come as low as 98.10, that it will bounce off this minus 618. The stop loss could be below the 4-hour support at 97.97, for example, which effectively would give 13, maybe 15 pips if we do 98.12. And we could aim for 45 pips. Let's take a look. 45 plus 12 is 57. That would be all the way up here. So maybe yeah, that could make sense. It would still be in front of this resistance, right? So it would still be a 3-to-1 trade like this, 3-to-1 reward to risk. And the take profit would still be in front of this resistance. So that's one idea for the supply and demand here. So that's why one of the reasons why I would recommend for those of you who did take a breakout here with me to move that stop loss there, because it shouldn't, I mean, usually speaking, it shouldn't break. So personally, I'll just go ahead and punch that in quickly. I'll do 97.99. That makes a 13 pip stop loss. Times 3 is 39. 39 plus 12 is 51. Ah, very nice, Yugoslav. That's great. On my other account, I personally did move the stop loss to the same trade, but I did take profit here, in fact, because I was thinking that this could retrace anyhow. Plus, today is the last day of the month, so I wanted to book some profit also because of that. So I did move the stop loss. I think it was at 98, just 98.49, 47, somewhere in here. At 47, I think. But in this case, I mean, the technical stop loss is better here. Right? Now, we might not go that low. As I said, this is already a minus 618 target. But that would be a very big stop loss for supply-demand trading, and we would not get a 3-to-1 to the next resistance. So we would have to target way higher. So yes, this could be the bounces, but anyhow, that happened already. That was 2 hours ago that we bounced here, so that's the past. But let's see if we can get that low. If not, the only other way would to be trade a breakout like this, for example, but that's a different type of trading. Personally, yeah, this is more 15-minute trend line. I don't know. It's kind of steep, this trend line. I could easily see maybe a spike up here and then still reject down. So I'll be maybe cautious with this somehow. I don't know. It definitely could be a good trend line though, and we could see maybe a continuation up like that. Obviously, if it does retrace lower, that would be perfect. Let's see. Any other supply demand zone on this dollar yen? I'll check the daily chart. Not really. 4-hour chart. Nope. Don't see it. As you know, I don't want to go really back way far, right? I just want to, for me, it's just like a trend line. Either you see it on the chart or not. I'm not going to go back all the way, usually speaking, to find a trend line, for example. So this is probably the best example and most recent example. So yep. So let's see. Definitely 5 waves. It seems that 5 waves have been completed. It could be completed. So we'll have to see if we get a continuation, an extension maybe, or a big correction. Let's move on. Maybe to the euro dollar. Oh, what happened with my euro dollar? I think I was preparing the Ichimoku webinar. Let me get rid of this for a second. Or we can use it for a moment. You can see that it bounced here, didn't it? Then we broke through the cloud and are using it as resistance. So that's pretty interesting. Right here and here, after this break here and here. Alrighty, so let me take that off. So as expected, the downside continuation, right? We're already looking at it and saying, well, this could be getting downside, but maybe from a bit higher, and it was the 618 fib. In fact, if we zoom into the 15-minute chart, we can see that, oh, sorry, wrong place, that we are correcting to the upside here. We made this, we made actually move up here, down to the 382, up to the minus 272, down to the 618 fib, up to the minus 618 target, which is also the 618 fib, and then down. Very classical. Right? So one more time, I'll show it to you. 382 fib up to the minus 272 target from the 618, and just missed the minus 618, but there's a 618 fib here as well. But the difference, what was it? Let me take a look. Just 5 pips, right? So typical choppy movement, of course, like this. And then indeed the rejection as expected. So we're continuing with that 1 hour bearishness, in fact. And let's take a look at the potential targets. Well, minus 618 could be a bouncing spot. That's the 136.82. We were very close already this morning, in fact. Just 7 pips difference. That's always annoying if the currency misses by 7 pips. Are we still going to touch it, or is that considered a D hit? Difficult to say. Yeah, that's just difficult. 7 pips, is within a margin that could be considered a hit. Then we would be bouncing off that minus 618 target, which is also, and here's the supply-demand part of it. If you then, let me take off these fibs though. Because look, where the minus 618 is very important, because look, the first move down, where did we stop? Right at this minus 618. That's where we got the correction yesterday, right? So let me clean this up a bit. So basically, if we look at the 4 hour chart, then that is a supply-demand zone, right? Now, hopefully you see it, but I'm going to show you which it is. That's this, right? Right in here. Why is that so? Now, for those of you who maybe didn't visit our last supply and demand zone, who could tell me why that would qualify? I don't know how many of you were, because we had a supply-demand zone previously, so we went through, certain elements that we were looking for with the supply-demand zone, and maybe some of you didn't see that, so I just want to emphasize some things. Yes, good job, Arn. Absolutely. We had an impulse followed by a shallow sideways correction, and then a continuation of that zone to the upside. So when price hooks back to that zone, it does become a bouncing area. Absolutely. That's it. What we don't want to look at are, for example, if this would have retraced very deeply and then bounced, that's a different story because that's a retracement. Right? So not tops or bottoms. This is pure like pauses in the middle of a move. So up, pause, up, down, pause, down. That's all. That's basically the basic premise. So any movement in this green zone could eventually see a bounce. How much a bounce? We don't know. It could be up to here and then still down and then up again. Right? That can happen. Where will it bounce? We don't know. It could be lower. It could be higher. We'll have to see on the lower time frame. But the entire area does become a support area. No, up, pause, down would not qualify because then that's a top, basically. If you go up and you have a sideways block like this, and then move down and then move down, then that becomes a top. And it could become, it's still a resistance because it's a top, but it's not a supply-demand zone. Supply and demand zone is then if it continues up, then hooks back, and then we should see that continuation or at least a bounce, either of the two. So that's the schematic there. And we'll be trading it from the blue circle there. So with that said, we would have to keep an eye on, for example, I think, yeah, 80, 136.80, maybe just a tad lower to hit that target would make sense. The stop loss would have to be below here. Let's see, if we were to put a fib on a new move down here, that target already is in fact below the supply-demand zone. So there is a minus 272 at around 135.60. Well, obviously the lower we get, the smaller the risk will become. So the better it is. So at the moment I'll still wait and see, because I'm not sure what level will be the best for an entry order at the moment. The yen is for me clear, but the euro dollar I would like to wait. Anyhow, if it does move, if you see it move down here, somewhere in here, then obviously the risk is smaller. The smaller the risk, the easier it is to get a 3-to-1 R2R, and the better the chances are of that 3-to-1 trade hitting target, because 3-to-1 would be somewhere aiming for this area, for example, if you have a small stop loss, and that's still before the bigger resistance, and just in case it does do something like that and then up again, then you have to take profit. From a bigger perspective, the question is, basically, if you look at the weekly, we are probably making this, right, as you know, which means that we need to break above 138.35 for the confirmation of that potential upside. So that's the confirmation. I would say anything above 134.76 is still bullish territory. If we break 134.76, especially if we break the trend line as well, then obviously something else is going on, and that bullish bias or analysis I have from the weekly chart would not be in play. So anything above 134.76 is bullish. Even if we were to do something like this or like this, then we could still bounce up to that 140 and higher. So for me, that the weekly bullishness, the validation level is 134.76 here. From a weekly perspective, or daily perspective maybe, one maybe even could consider this a supply-demand zone. Maybe like that. It's not as nice because there's some price peeking out of it, but it's possible because we do have an impulse. It is more or less a sideways zone with one spike and then a continuation. So what we were just looking at is a very small one, and this is the bigger one. And price could maybe be attracted to the bigger one, and therefore we could see something like that, potentially. Right? Maybe not, and we just bounce here and hook back and continue and go all the way up. The confirmation, once again, of that upside is a break above 138.35. And that's why we were very careful in here, justly so for longs, and we did get the correction. So that's about it for the euro dollar, I think. From my side at least. Let's take a look maybe at the pound. So I was talking about 160.70. It did push a bit through it. It went to, oh, okay, not that much. 77, in fact, 78. So just a few pips. That's almost nothing, right? And we did get the rejection. Unfortunately, of course, it was the FMOC that pushed it lower, but that's always annoying. But what can we do? And it had everything to do with this minus 618 being right here, right? The target of this first up move, very important. Oh, that's what happened. So Let's put that in a bigger perspective. We were looking for a break below either from 160.70 or a break below 160.20. But unfortunately, the FOMC, so I wouldn't trade that break below 160.20 during FOMC, or from 160.70 probably, or I didn't yesterday in any case. The only thing I did stay in was the dollar yen with FOMC. That is a bit of a risk, definitely. But I already had the feeling that, or analysis that the volatility would not be that bad yesterday, but still, you don't want to be exposed to too much risk either during a news event like that. In any case, we did break the 160.20, but we didn't go to the 786 yet, right? So we missed that. We bounced off 160, in fact, and here's the 786. So strange for me, but maybe we can still see that downside. Let's take a look. The pound dollar is in general, it's just getting into a very big zone here, right in front of this resistance. That could really mean that it's just pausing to break, and it's catching its breath to find enough energy to break through that weekly resistance, or it's just struggling and it's going to crack to the downside. So obviously the upside lines are very clear, right? There's these two red ones and this black one. Very important line to keep an eye on for downside is really this bottom, of course, at 158.90. So that's, I think, logical, right? Is there any supply demands on this daily chart, by the way? Let's take a look. I don't see it, huh? Not on this day chart. I can scrunch it up a bit. No, it doesn't look so. What is the oscillator saying? That we have, yeah, it's reaching the zero line. Not giving much information, just bullishness. How about this 4-hour chart? Well, the 4-hour chart has a supply demand a bit lower. Let's take a look. There's this zone, you see here, right in here. It's under the bottom. Price never got there, so it's still active. And it is part of this up move, sideways up move. It is quite a while ago, so how strong it will be, the more we go in history, of course, the less stronger it will be. Here is one, but that one was used, right? Why? Because price moved away from it and hooked back and bounced off that. So this supply demand zone, right, was already used right in here. So if it has been used like that already once, it loses its power. It still could have an effect the second time, but obviously the first time is the most effective. So that one wouldn't qualify. This one, as you can see, price in its history never went back to that level. So that's still a valid one, although a while ago. Other than that, don't see one here because that's just the bottom, right? That was down, bottom, up. Maybe the 1-hour chart. Let's take a look. 1-hour chart, we could see maybe here one. Small one here, right there. That was kind of like down, sideways down. This is a top that doesn't qualify. Maybe the entire zone here would qualify. Like that as well, potentially, I don't know. Not that neat, but maybe. And also at the bottom there's one, right in here. Right there is one. And maybe a very small one here. Very small one though. Although that's probably too small, I would take that off. That's just like 2 candles only. We really need a number of candles because otherwise it's not significant. This is maybe more a 15-minute supply demand zone, but that's really that would be too far in the past really to have an impact. So that's about it, I guess, for the supply demand. But in any case, regarding the analysis in general, difficult to say here. I think that we've moved down a lot, and we could be getting into a bouncing area. Could we move down one more time to go to the 786, 886 fib? I think that definitely is still possible. So I would still be on guard for bearishness unless we really break maybe above this 4-hour top. Right there, if we zoom to the 4-hour, this 4-hour resistance, if we were to break above that, then I would say that we might want to be careful with the bearishness. Anything below there, this upside could easily be retracement. Let's put a fib on this first up move. And we can see a minus 618 at 160.70. And that would be also hooked back to this resistance level, right? So that could be a resistance level, and we could see maybe some downside pressure from there. I'll put a pending order there. I mean, if it does reach that target, I don't know if it goes that high. I think it's a small risk. $167, 160, 68 probably. With a stop loss just above this top, which would be 83. And I will go for an ambitious target. I will try to aim for the 786, which would be 159, let's say 80, or 84 maybe even. Which is 74 pips target. Okay. So that's the idea, or my idea. Oh, it's not a supply demand zone, but it's more fib target bounce, right? Let's see. Looking corrective to me. And we do have space, I would think, to these fib levels personally. So yeah, anything that stays below here is, as I said, just to summarize for everyone, basically everything that stays below the 4-hour fractal resistance, I see that potential or space to go down there. If it does break above the 4-hour support, then there is a chance that we could be reversing, right? Could be a small wick that pushes through and then still move down there. Well, then we're unlucky. What can you do? But still, I mean, it's how many pips above? So I put it 5 pips above the top. Maybe that's a bit tight, but anyhow, yeah, I'll leave it there for the moment. I do think that the minus 618 should hold it, and then we have that space to there. It's a small risk in any case with a good reward potential. And usually the pound does like these lower fibs, right? These deeper fibs like 786, 886. I don't think that this qualifies as a 786 bounce as well. So yeah, it looks also the fact that we have that minus target of this smaller correction usually does see a rejection. So let's see. That's the idea. How about the euro pound? Euro pound couldn't make it up, in fact. Couldn't push to the 86 level. It's corrected deeply to the downside, or some bit to the downside in any case. Let me change the template 1 second. Oh, I forgot all the lines are gone. Of course, that doesn't matter. Yeah, we can see that the price is still above the 4-hour band, though. Right, so anywhere in here could still see a bouncing area. So let's take a look at the 1-hour chart and put a fib on this first correction. Yeah. Somewhere in here we can see potential for targets and this longer term band. So I wouldn't be surprised to see some bounce here. We do have divergence between these tops. So I'm not sure how to view this, in fact, to be honest, because this I was considering this a wave 1. I thought this could be a wave 2 and a wave 3. A wave 3 shouldn't have divergence with wave 1. So maybe this is indeed an ABC correction, which wouldn't match my long-term analysis, but what can you do? Life is not perfect. So but anyhow, fact is that we have divergence between these 4-hour tops, and therefore we could retrace back to the long-term moving average. So something like a bounce here off this band, get weakness, and then move down to this long-term moving average approximately, maybe back to this level here, is something that could happen if I look at the divergence and moving averages. Right? Let's see. Are there any supply and demand zones in here? There's maybe a small one here where it's only 3 candles. Maybe small. Here was one, right? That got used in here, as you can see. We moved up. Also small one though, but still up, up, hook back and continue. Maybe a small one there. It's a bit small, really. Probably 4 candles would be preferable, really, or 5. Here's 1, 2, 3, 4. This one has 3. So this is a bit small compared to the lower one. That's about it, I think. Yeah, okay, so anyhow, 1-hour chart, let's take a look. Yeah, this is more like a 1-hour supply and demand zone, isn't it? You can see here are more candles right away. There was one right there. Let me show you a good one. Right here. That was a nice one. And you can see how it was used nicely when it did hook back. See that? Boom, and continue. Yeah, so I don't see much to trade at the moment. I think that, you know, the currency is moving down, but we could expect a bounce. Would I like to trade the bounce? No, because I think not much potential anyhow. So maybe if we see weakness in here, for example, that could make more sense than trading it either way here, I think, for the moment. Odd USD. Made one more push down, in fact. Wow. To 94.40, but now getting a bounce. That was a bit nasty with that FMOC that spiked it down here. But the spike really getting no follow through, a bit of a wick as well. And we're bouncing off this minus 618 target, as you can see, off this first down move, right? So this could be a bouncing spot. I think that 94.40 is definitely a level of the Aussie that could see that bouncing spot, because there's maybe, let's take a look at the daily. It's kind of like, is it the supply demand zone? Let's take a look. If you look at this daily, this could be a supply demand zone, right? It's not the best one, but in any case, it's a bouncing area, that's for sure. Anything above that 93.80, we could see that bounce. So yesterday's high is still important, and yesterday's high can be represented by, for example, this trend line, and we'll probably need to break above this level too, and then we will have a confirmation of that bounce most likely. Right? Maybe inverted head and shoulders as well, like that. Potential. Anyhow, a break above this is needed for a breakout trade to the upside, probably, to try to continue with that odd USD. Maybe to retrace part of this, who knows? But if it is long-term bullish, which it does have potential, then it could move to 99.20. The confirmation of that would of course be a break above this top. All right, so any up move here could be good until we retest this top, which could see some resistance kick in. But how much is the question? And then of course, if we do move up, then we need to break above this top, and we can move to 99.20. There is on a 1 hour chart, there's something to reckon with. If you are trading it to the upside, be careful of this. That is, I would say, a potential resistance, because that is a supply demand zone. In my opinion. 1 hour though, right? 1 hour supply demand zone. So let's see. Otherwise, I don't see much. The supply-demand zone, for those of you who are wondering, is just basically a pause in an up move, or down move. Sorry. So if you have an up move, you have up, pause, up. In a downside, it would be down, pause, down. The pause preferably has a number of candles, like 4 or more, or maybe 5 or more. it should be relatively tight range. It shouldn't represent, it should be a range, it shouldn't represent the bottom. So what you preferably have is a range like this that has at least within that range, it has like two tops so that you have a range environment, and not a bottom, which is, or a top like this, for example, where you really retrace actively and then get rejected. That is a top, not a supply demand zone, right? The difference is that you have down, sideways, and within that sideways move, you see basically this happening. And then you see continue down. There are some optimizations, for example, like the stronger the down move and the stronger the continuation, so the stronger the continuation especially, the stronger that zone is. The speed of which the price is traveling away from that zone. If it doesn't travel that fast, the zone is not that important. Also the distance it travels. If it just goes like this, sideways, and then peeps out here, then obviously the hook back is not going to be that important. If it travels a bit more further away, then when it does hook back, it has more importance. So the flatness is very important of that zone. Now it doesn't work all the time. Of course, you could maybe see this zone right in here, and price just went through it, and that had everything to do with the bigger time frame analysis. That's why, of course, if you combine it a bit with your fib analysis, you knew that this is a big daily 50 fib. That big daily 50 fib is going to usually cause some respect, some retracement, and then this zone really becoming an importance for the market is just, the likelihood is just small, right? So if you use a bit of a fib analysis with it, then you know that this is really not that important. That the likelihood of a bigger correction is just high. When entering, if you use it for an entry, you would need to wait for the price to move back and then take the entry anywhere in that zone, put the stop loss above it, and target preferably the next support. But also preferably 3-to-1 R2R. To compensate, of course, the risk that, I mean, not every one of these is going to be winners, of course, so the 3-to-1 will throw place the equity curve into positive territory. Preferably, you also do not want, if you have a zone like that, you don't want much price sticking out, right? A bit of wicks, okay, but preferably all the prices in that box as much as possible. This therefore doesn't really qualify this one. This is more, you can see this is a bottom here. It's not really a range. This one could qualify. Right in here, or almost. It has more or less two bottoms and two tops like that. Well, I don't know, folks. We are potentially bouncing. Could be bouncing like the odd. We would need to break probably above this for our fractals to confirm that. Here too, we can move up to retest these tops. Then we'll have to see. That depends on higher time frames again, but you can see we are kind of it's chopping around here. So maybe that could be a sign that we are respecting this green line and potentially turning. So dollar yen is moving a bit lower. Let's take a look. 98.12, I have an entry. We're seeing the dollar making some weakness against others as well, like the CAD, which got some continuation, but is moving down pretty fast now. It's at the minus 618 target. Let's see if we get a bounce right here. Is this one of those dips, like here, for example, or here? Could be. Question mark. We'll have to see. There is some divergence on the 1 hour chart, but let's see. This is the pound yen. Pretty much stuck in this sideways move, isn't it? Oh, so sorry. I don't know. It just doesn't seem that appealing to me at the moment. I'm just scanning for supply demand zones as well. There's one way lower, but that's almost irrelevant at the moment. Let's take a look at the EJ otherwise. Maybe there's something more to see. EJ, oh, we can talk about the EJ a bit more because, let's see, I think we were talking about, well, yeah, I took this long. I think that was before our session, but and I got out here, in fact. It didn't reach my original target, but I was a bit worried about this resistance, as we said, and this resistance, and the top of the channel, and it had this hourly candle, and I wanted to see if it could push through, but it didn't have it, and I got out at 138.20, or lower, around here then. I think I put, yeah, somewhere in here. So there were some good breakout trades here, and a hook back here, and a break here, and a hook back here, but now we are getting a bit of a steeper retracement. We are back at the long-term moving average, so this itself could be a bouncing spot for the euro-yen. Let's see. We went very far. We only stopped briefly at the minus 618, and we went all the way down to the minus 127. Wow. It's an aggressive move down. And we're also in the band of the 4-hour chart. So let's see, we could get a bounce here again and continue up like that. If we do break below, let's say, this bottom, or if we halt in here and break below here, then of course things are changing obviously, and we're getting more bearish, right? Until then though, any bearish sentiment is too early here. Obviously we can see that we're back at support, right? Potential support, like it has been support here, and here, and here, and here, and here. So if anything, we could be looking for longs around here if you wanted to take a bounce off of this support. The long-term moving average as well, the bottom of this trend channel, etc. This itself may be a small supply-demand zone, in fact, right? Because it did fall, went sideways, and fall, right? So it doesn't have to be necessarily with the trend. Although, obviously, if you trade that supply-demand zone to the downside, it is trading at counter trend. So the likelihood, the odds are just a bit less good. But it definitely could be a resistance zone. So something to be aware of if you're maybe going long. Depending on, of course, where you enter and how you enter, it could be a target, for example. Alrighty. Other than that, let me just quickly take a look at the day chart. Now, there's no supply-demand zone on the day chart because it's so choppy that what you need for supply-demand zone is a real clear thrust, basically, as Tarantula says, or impulse, sideways, and continue. If you don't have that trending environment and you're just chopping around like that, you're not going to have it. That's why. Not on this day chart, obviously. Not even on this 4-hour chart, right? Because it's chopping too much. So the same with the pound yen. It really didn't have much sense to look at that because it's just too choppy. Well, if the odd USD could be bouncing, then this odd yen might as well. And for example, this resistance line like that, right, the blue one, that could be a good indication if we might accelerate to the upside here. Let's see. So far, it's looking like a bear flag, in fact, but that depends. Right, could be a channel too, and if it breaks above the top of the bear flag, potential bear flag, then it could be accelerating to the upside, right? So this could either be a bear flag, yes, or it's a channel, start of the channel, the base channel, and then if it does break out, then it would be that bullishness would be confirmed that we're expanding the channel to the upside. So we're still in a decision moment, right? Are we going to break the downside here, or maybe move something to the upside? From a 4-hour perspective, we do have, let me get rid of these lines 1 second. We could be in the bottom of the trend channel like this. This is what I want to show you. That could be a potential trend channel. So we could be at the bottom of that. So if we do break above resistance, then we could see that with the trend continuation, in fact. So something to keep an eye on with the odd yen, just like something like similar like here, for example. This one and this one, all of those moving back too, and then solid continuation. Now, obviously, we do have divergence between these tops, yes. So we would have to be careful when we do break to the upside we have to be careful of this top because it could act as resistance, especially because there's divergence, right? So something to be aware of. Euro-AUD is struggling at that resistance level we talked about, right? The 4-hour chart. We're talking about this 145.50 zone. I couldn't break through that. And classical, right, went to the minus 618 target here. Attempted to break again to the upside, but couldn't break this top or the resistance. And on the 4-hour chart, we would see that as like that. Yeah. Deep pullback. So that minus 618 target is at 143.95. And from a 4-hour perspective, this itself could be a supply demand zone. Now, I was a bit cautious last time to call this a supply demand zone because of the fact that I think that this top could spiral this for a deeper correction. So the question is, how much can we trust this zone, considering that this itself is a major resistance, and I had hesitations because of that. It's the same like the odd USD example, if you remember. It too was at the 50 pip resistance, and we had a supply and demand zone close to the resistance, and I was saying that that's not a good one. But the same would be valid for this. So let's see. The minus 618 could be more valuable, but you could use the bottom here as a stop loss. That's about 50 pips. It is quite a big stop loss though, compared to the potential reward, which is maybe about 100. So it will only be a 2-to-1. So we could still move down maybe a few pips, not much, 28, 20, maybe 30 pips here to that target. We are at the minus 272 target as we speak, in fact, right here. And so let's see if we can break below that target. Could be a bouncing spot as well, the minus 272. If we do bounce, then you can see that the new minus 272 target aligns itself with the minus 618, and maybe something like that could happen. Let's see. Obviously, at the moment, we're right at the target with a very small limited space potential to the downside. And if we do bounce, then all these fibs become resistance. So as you can understand, I'm not too enthusiastic about the potential of both at the moment. Either I would like to see it move down, or I would like to see it move up, one of the two. Because at the moment, really, I don't see any potential to trade it. I mean, it's just there's no space that I would like to trade. Let's take a look at what happened with gold, maybe. We talked about the potential of this up move to be a hook back, which turned out to be true. We said if this blue line breaks, it has some upside breakout potential, but watch out for this top, right? Because that could just be a hook back for more downside. And that indeed happened. Pretty cool. And you can see it took too long to break. This hook back was just too long. It broke this rising wedge, and when it hooked back, the time factor was just too long before it broke this top. And we can use fibs for that as well, and we can put a fib on here. Went to the minus 1,000, in fact. All the way to the 886 fib, and right now at the minus 272. Now, does that necessarily mean that this upside is over? No, not necessarily. Could just be a bigger retracement, right? It's like that. For that answer to, for us to answer that question, we need to take a look at this daily chart. Pretty big rejection daily candle, obviously because of that move. Well, let's see. Obviously, we'll be still having these support levels to deal with, as we said yesterday. That move could just be retracement, and we could see it then a bounce in here, right? A bounce, and then maybe later a break. We could even put a fib maybe on, for example, this upside. Let's see. Yeah, well, anyhow, it could be a potential bouncing spot. Let me take a look at this. Well, in fact, maybe one could argue for supply-demand zone, in fact, right here, in a way, to a certain extent. There's a small spike above it, but so, if price were to hook back to that level, that could definitely be a area where price moves up again. We also have a long-term moving average. So that could be a bouncing spot there. Here's maybe 1-2. Nah, that's not so good because it's more like a inverted head and shoulders, in fact, on a lower time frame there. So not that great. But so obviously the best trade was somewhere from here because now we're kind of like halfway in the middle of nowhere. I mean, we can make maybe a bit small down move. We can retrace up and then down. Now the options are, in my opinion, too diverse to really say that we have an edge to trade it to any side. The same like the euro odd, in fact. So for me, it would either be waiting for it to move a bit lower or saying, okay, let's wait for at least a break above these tops, right? Because either of the two right now, we're kind of in the middle. That's the problem. And therefore riskier. So let's see. For the moment, I would be just, as I said, basically just be in a wait and hold moment at the moment. Dollar index getting some bounce this week so far. I didn't mention that, I think, but we have to be a bit careful also with the fact that it is the end of the month, by the way, so the whole day is riskier, by the way. Especially if we probably get into the later part of the day. I mean, the whole day, in fact, is just riskier, but the later in the day, probably riskier it just becomes because, and we might even wonder. I would maybe just, just to be on the safe side, even if you followed me with these entry orders, maybe if you just cancel them after London session, after the first 3 hours of London session, because New York there could be more volatility because of that, Graham is asking about the pending orders that I have on the dollar yen and pound dollar, that they coincide with pivot points on the 5-minute chart. Was this part of my thinking or did it happen by coincidence? And it was coincidence. I didn't look at the pivot points. We can take a look at the camera. I didn't do that in fact today. Let's take a look. Let's see. This is the euro dollar, but I need the pound dollar, in fact. 1 second. Well, we can take a look at the euro dollar. That's okay. So it says L3 short at 137.47, which yeah, that plays into the same thinking that we have, that it could maybe move up and still one more down, right, to this lower 136.70.80 zone, which would make sense to me. The L4 is at 136.74. That's a bit risky in my opinion, because yeah, that could be a bouncing spot, I think, personally, but okay. L4, H4 at 137.72, yeah, I guess if we get that high, but then still we have this top in play. I don't know. Seems a bit risky to me. Probably this idea is the best, the H3, probably down to the L4, but let's see. The pound dollar. The pound dollar actually has an H4 long at 160.68. So I guess that's a decision moment. Either it breaks the upside to H5 or it does bounce to the downside. At the moment we are at H3, which we still couldn't break, so we have no guarantee that we'll even get that high. The L4 is below 160, which that makes a lot of sense to me, because obviously that's the trade that I'm trying to trade from here to the downside. But maybe we don't get that high. If we don't, then a break of this bottom would be another way of trading the downside down to 159.70, and the L5 is in fact at 159.45. It's a bit lower. Ah, there's sorry, excuse me, I got it mixed up. That's a long, in fact, right here at 160. I don't know. That seems very risky because we would just be breaking this bottom. I don't agree with that. Well, usually though, if you break a bottom, the pound likes to do the opposite, so it could see a bit of an upside, but I don't think much. And the L4 is all the way at 159.80. That's, I don't know, that there's a 786 fib at 159.75. That doesn't make sense to me. I wouldn't do that. Alrighty, that's that. So we're getting close to the end here. Does anyone else have a question? Let me just take a look at dollar yen. It's going nowhere. It's quite quiet, right? Tomorrow will be the first day of November. That too, by the way, will be, and it's a Friday. That too will be a wacky day, just because we have a monthly candle finishing, right? Which means that everything again starts from scratch, right? A new month. So we're going to have the first low and the high of the month, the first low and high of the week. You know, everything starts from scratch again. If we look at the monthly chart on the dollar yen, the monthly candle is closing, right? What do we have? We have to, well, I will at least, depending on how you trade. You don't have to, but if you do a bit of swing trading, then it makes sense to take a look at the monthly candles. How do they look like? What are their highs and lows? How do they compare to the last month? Look at this, for example, dollar yen, we have a doji. Last month was a doji. This month has a bigger wick at the bottom, and last month had a bigger wick at the top. Is that important? I don't know. It's just, in any case, it's ranging, obviously, with no clear decision, right? It's all indecision candles, even the month before. We got 3 months of indecision in a row, in fact. And because of that, because of that monthly chart, to be honest, showing 5 months of not breaking this top, I think that maybe there's even a likelihood of the dollar yen, who knows, it's a bit risky to say, but maybe this is actually just a correction down. This is a correction for more downside, and then we'll find support up in here and then go up. Who knows? It's possible. It's possible. But in any case, logically, this month's low, 96.56, is key for that analysis, because if we do something like that, then 96.56 would have to break, and when it does, and also 95.85, then we could see that move down to the 90.91 before we probably move up again. We would have to take a look at, let's take a look at the euro monthly. How does that look like? It's a bullish candle, a bit of a wick, but it is bullish. And we have obviously an uptrend on the monthly. We have higher highs, higher lows, right? Etc. Crude oil, let me take a look. Do I have it? Where can I find it? I wouldn't mind at all, I just don't know where it is. I know that I have XAU and XAG USD, but other than that, can anyone help me? What is the symbol of that? I guess it would have to be under charts, but I don't know which one it is. Is it? I don't have it then. Yeah, I would love to look at it, but I don't see it here. No. No, I don't have it. No. Funny. Can't find it in the list here, that's for sure. The current one. We can take a look at the pound dollar, for example, the monthly. How does that look like? September was usually bullish. This bit bearish. So far a bit of a wick though. Difficult to say really, not that much information. How about the odd? Oh, the odd is funny. Up move with a pretty big wick here. Could it be a shooting star? I think that's it. I'm not an expert in these names. I think it's called that, but oh, thanks. Vigantas has a tip for me. I have to go to Market Watch. Still not there though. No. Next time, I'll try to figure it out. Maybe I can choose under symbols. Yeah, it's possible. Let me take a look. No, there it isn't either. Funny, huh? Strange. No, it's probably different. Like when Michael was talking about oil, maybe I don't know how you have to maybe do it differently because he's talking about gold, silver, oil, right? Stocks and sectors. Stocks and sectors I don't see either here. So maybe you have to. I don't know. Maybe you have to have a different account, or I'm not sure. So we can take a look at what else? Monthly chart of the dollar CAD maybe. That's a pretty big wick here. Oh, this is the Kiwi. Oh, that's a pretty big rejection wick there. How about the Euro odd? Ah, it's a headache because I have to take all these lines off so I can at least see the candle. Uh, there's quite a lot of them. Ah, finally. The last one. Well, what is the Euro odd saying? It has a bit of wick at the bottom, a bit bearish, not much, I guess. But the weekly, I would say, showing the fact that I think a bigger retracement possible because we're stalling here. So the downside is, I think, a bigger correction is definitely in the cards for this Euro odd. Maybe from here, for example, for that, maybe move down to this minus 618 target around 136. So that's something that I think could pan out, which would bring it back to the long-term moving average here, as you can see. So up, down, and a bounce would seem the most logical path for the Euro odd at the moment, for example. Well, folks, I guess that wraps it up for today. Let's see. I hope that we were back at 5 p.m., right, with the Ichimoku indicator. That's UK time, or 6 p.m. Central European time, 5 p.m. GMT in any case. And we'll talk about that. And be careful today, tomorrow, because it's always a bit wackier with these new. Every first to the last, as you know, if the Forex is just wackier, more difficult to trade. First month of the year, last month of the year, first day of the year, last day of the year, first day of the month, last day of the month, etc. Yeah, market is very quiet, so. So let's see. Alrighty. So in any case, wish you all a great day and great trading, and talk to you soon. Cheers.
The